Xpring Well Special by Xpring AM The Next Chapter of Growth สำรวจเทรนด์เศรษฐกิจขยายโลกของการลงทุนให้กว้างกว่าเดิมวันนี้เราจะพาเพื่อนๆไปพบกับการลงทุนในอสังหาริมทรัพย์และโครงสร้างพื้นฐานหนึ่งในการลงทุนที่ให้ผลตอบแทนดีที่สุดในปัจจุบันกับ Brookfield Asset Management บริษัทจัดการกองทุนอสังหาริมทรัพย์ที่ใหญ่ที่สุดในโลกโดยมีสินทรัพย์ภายใต้การจัดการกว่า1 ล้านล้านดอลลาร์ที่มีความเชี่ยวชาญในการลงทุนด้านอสังหาพลังงานและโครงสร้างพื้นฐานมากกว่า100ปี
สวัสดีครับผมธรรมนันท์ รัตนเนตรกับรายการ XAM Wealth Special วันนี้เราได้รับเกียรติจากแขกรับเชิญพิเศษคุณมาร์ค ฟราว Managing Partner จากบริษัท Brookfield Asset Management มาให้เกียรติแนะนำเรื่องการลงทุนในอสังหาริมทรัพย์ของปีนี้ครับ Good morning Mark.
Good morning. Thank you for the invitation to spend some time with you and your Xpring colleagues today. We really welcome the opportunity to give you our thinking about the real estate markets and how Brookfield is approaching investment activity in 2024.
Can you please provide an overview of Brookfield and your background and experiences in real estate fund management?
Sure. Firstly, good morning. I'd like to thank Xpring for welcoming us today and the opportunity to share with you our thoughts about the markets and Brookfield generally. Maybe firstly, I'll start with Brookfield. Brookfield is a global asset manager. We are focused on 5 primary pillars, that being real estate, infrastructure, renewable power, private equity, and credit. We've been in business over 100 years, and our goal is to provide investment strategies for our clients around the world. I think there's 3 unique things about Brookfield that I would like to highlight for you. Firstly, as I mentioned, we've been in business over 100 years. We started as an owner and operator in these sectors. So we've got a deep operating expertise, which we think makes us better investments to provide values to our clients. Secondly, we are very large. We have about $870 billion of assets under management. And I think this scale gives us some enormous benefits. And I'll give you a couple of examples of that, particularly in real estate. Firstly, in our real estate business, the large corporate tenants, the big retailers, are tenants with Brookfield around the globe. So as these tenants are looking to lease space, we've already done lots of business with them, and I think it really is a competitive advantage in dealing with them going forward. Secondly, our businesses are very capital-intensive businesses, and we've got great relationships with capital providers, that being the banks and the life insurance companies and other providers of capital globally, which is a real competitive advantage. And then thirdly, alignment of interest. Brookfield is a very large investor in all the strategies that we offer to our clients. Often we're the largest individual investor. And so there's great alignment of interest with Brookfield's capital along with our investors' capital, which I think is very important. In terms of me personally, I've been in the real estate business since I went to business school. I'm in my 34th year. I've been Brookfield now 24 years. My current role in the company is I'm the portfolio manager for a core plus diversified real estate strategy in the United States. It's one of Brookfield's flagship funds. One of the things I've enjoyed about Brookfield and the benefits is I've had a number of roles with the company during my tenure. I was chief investment officer of our office business globally. And I started in the business leading our debt capital markets business, sourcing debt capital to finance our real estate business 24 years ago. And before that, I was with Citibank in the debt business. So I would say 2 things. I've been in the business a long time, 30 years, over 30 years. I've seen a number of different real estate cycles, and that experience and going through that is a great learning experience and a great benefit to me in my career. And I've been on both the debt and the equity side, which I also think has provided great learning experience, provided great experience for me in my current role.
What are your thoughts on global real estate market and the U.S. real estate market?
So I would say what's very interesting, and I think I'll just take a minute and talk about the last 12 or 18 months. What's gone on in particularly in the developed world global economies has been very similar, and that's not always the case. So when we came out of COVID, obviously there's a lot of inflation in the developed nations around the world. Central banks increase interest rates to try to bring inflation down, and that's resulting in some slowing economies throughout the world and many of the major countries. Overall, we think real estate values are in a bottoming process, and we think 2024 in the U.S. and in many countries around the world are going to be a very attractive investment opportunities. In the U.S. specifically, I think there's two interesting things. One, as I mentioned, the Fed in the United States increased interest rates. It was actually the steepest increase in U.S. history. And the full impact of that, obviously, is slowing the U.S. economy a bit. But the U.S. economy is holding up very well. Employment has done extraordinarily well, as the unemployment rate's still below 4%. And U.S. economic activity continues to perform very well, though it will continue to slow a bit. So what that means for us in real estate is, at Brookfield, we've still got conviction, in underwriting good rental growth in many of the real estate sectors in the United States because the economy continues to perform pretty well. The other factor in the United States, which we think is very interesting and likely to provide many investment opportunities, is there's a significant amount of real estate debt maturing in the next year or two. And you will have some real estate owners unable to refinance that debt maturity because of high interest rates and the requirement to pay those loans down. So we are starting to see some distressed situations in the United States. So between the performance of the economy and some distress in the capital markets, we think 2024 could be the beginning of an interesting investment environment.
Could you please provide us a brief overview of different investment opportunities in public real estate investment and private real estate investment?
Sure. I'll start with investing in the public markets. The public markets have, for a long time, provided an avenue for investors to invest in real estate. That goes beyond the United States. That goes in many of the developed nations around the world. And so that's been going on for a long time. And investors are able to get exposure. For example, in the United States, you get exposure to a retail REIT. And sometimes it's geographically focused. Sometimes it can be focused around the country. And so that's been going on. That's similar in other countries, and that's been a very well-established market. In the private markets, there's two different ways that investors can get access to private real estate investing. The first one is investing directly into real estate, direct investing. And this is when investors will buy directly an interest in a building. And the issue with that, and it's very common, the issue with that, it requires resources and infrastructure and expertise. And so that's obviously not suitable for many investors. So the other way investors can get access to the private markets is investing in funds through companies like Brookfield, where we have the expertise, to operate the real estate, make strategic decisions, and maximize valuation. One thing I would comment on, very interesting, if you look back in the private markets, if you go back 40 or 50 years, most investors, particularly institutional investors, their investment in private real estate was very small, 2-3%. And over that 40 or 50-year period, there's been a steady increase in allocation to the private markets. And in the United States, in real estate, that probably is between 10 and 15% today and continues to grow slightly. So it's a very well-established market today.
How does Brookfield, a general private real estate partner, select investments and properties? What factors do you consider when evaluating potential real estate investments?
So firstly, I would say, and I'm going to start this sort of with a higher level view, but firstly, I would say what's the most important is you have a clearly defined strategy. So you understand what expertise you bring and then you define strategy in terms of risk return profile, and then you take that to determine what markets and what sectors you're going to invest in. And so and I'll give you a good example. My current role is focused on a moderate risk core plus sector, and so our strategy is to invest on a diversified basis in the major markets in the United States. So that's the most important thing. Firstly, to define that. And then secondly, what I would say, in order to be consistent with that strategy, what we do every day is we think about what the major trends are going on in our everyday lives and how that impacts the use of real estate. And I'm going to give you 3 examples. So the first one, in the United States, since the global financial crisis, we have not been building enough homes. So there's a housing shortage in the United States. When you add on to that, the cost of homes to buy today is extremely high, and mortgage rates are extremely high. So there's a housing affordability challenge. So when you combine that to, we think what that means is there's a lot of demand for rental housing in the United States. And that's housing in many forms: multifamily apartments, single-family home rentals, manufactured housing, student housing, senior housing. So we think there's a lot of demand there, and that forms part of our strategy as we think about the business. Second example, coming out of COVID, governments in the private sector wanted to bring supply chains and manufacturing chains back on shore. When you couple that with e-commerce growth, okay, coming out of COVID, e-commerce growth was probably north of 10% in the United States. Today, it's 7 to 8%. But when you combine those factors, that creates a lot of demand for warehouses, cold storage, self-storage, and logistics facilities. So that informs our strategy into investing into those sectors. And then the last example I have is in the office sector. And now with the work from home and the gradual return to the office, that's creating some weaker demand in the office sector. That's particularly playing out with what I would say lower quality office. The highest quality office, in the major markets around the world, but certainly in the United States, that's still performing very well and seeing good demand. But the inferior quality, where they don't have as good amenities or good a location, is seeing lesser demand. So that's sort of the process we go through now in terms of what sectors that we're investing in. And then you've got to be consistent with your risk profile. As I said, I'm working on a core plus strategy, so we're focused on the major markets in the United States. We're not trying to invest in a lot of secondary markets. That's consistent with a core plus risk. And then lastly, what I would say is, and then we do a bottoms-up analysis. One of the benefits of Brookfield is, as I mentioned, we have a very big operating group. So we have people on the ground in all these cities and markets looking for good investment opportunities, and that's how we approach the business.
What is the reason for including private real estate investment in the portfolio? Is it for diversification or reducing volatility?
So I would say there's a number of reasons that investors would want to get exposure to the private real estate markets. And I would put them into 4 broad categories. Firstly, diversification. The private real estate markets are negatively correlated with the broader public security markets. So if you think of most investors globally, both institutional and individuals, most of their portfolio tends to be in public securities. And so when the private markets are negatively correlated, that provides a great diversification. So that's one reason and one advantage we think. The second advantage is private real estate tends to have a lower volatility than the public real estate markets, which is so once again, it's a great complement to your rest of your portfolio. Thirdly, and this is something that those of us who have been in real estate for a long time have been saying, is that the private real estate markets tend to be a very good hedge on inflation. And we haven't seen much, it's been 30 or 40 years since the U.S. has seen significant inflation, but we did see it in the last couple of years. And that turned out to be true. Particularly real estate asset classes with short leases. You have an opportunity to mark those leases to market very frequently. And so we saw real estate cash flows increase even above inflation over the last 2 or 3 years. And then lastly, and I think this is really one of the true benefits, is in the private markets, you are really able to customize your portfolio. You can get as granular, and I'll give you 2 really broad examples. You could get exposure to a development fund for hotels in Miami. So that is a high risk, very focused strategy. Or you could get exposure to something that, like I work on, a broad, diversified portfolio in the major markets in the United States. So you really have an opportunity to choose your exposure and customize what you want to do in a very broad sense.
Why do you believe private real estate investment is a good opportunity to invest in the year 2024?
As I mentioned earlier, the last 2 or 3 years have been a tougher environment for investing in the private real estate markets, largely because of the interest rates that the governments have executed on to address the inflation situation. Over the past 12 to 18 months, generally real estate values in the private markets are down around 15-17%. We believe that that's now starting to get a bottoming process. And we think you're going to start to see firming of values and recovering as 2024 evolves. I also mentioned a couple other things which I'll reiterate is there is a large amount of debt maturing in 2024. And some of the owners of the assets are unable to refinance that debt. So that's going to provide very good investment opportunities as 2024 progresses. And then a couple other things I would add to that is the challenges over the past 12 to 18 months really are more macro-driven, caused by increase of interest rates, as generally real estate fundamentals remain very strong. You're still seeing pretty good occupancy rates and pretty good growth. So as I said, the challenges aren't a result of the real estate fundamentals. It's more the macro. And so we think the macro situation is improving. And then lastly, what I would highlight for you is one of the things that as a real estate investor, we pay a lot of attention to is new supply in the real estate markets. And I'm not saying that there's not some pockets of new supply, but sitting here today, the amount of new construction starts, particularly in the United States, is very low. And that's because of the inflation over the last couple of years, the cost to build new real estate is very high. So you can't economically justify to build too much. And so what that's going to mean is over the next couple of years, the supply demand is going to be really in favor for owning of existing assets. And so we think a very good investment environment in 2024. So overall, we're optimistic as 2024 progresses that the market's going to firm and we're going to see some really good investment opportunities.
ครับขอขอบคุณมาร์ค บราวน์นะครับสำหรับเกร็ดความรู้ในการลงทุนในอสังหาริมทรัพย์ทั่วโลกในปี 2024 นี้นะครับแล้วก็ขอขอบคุณท่านผู้ชมผู้ฟังทุกท่านนะครับสำหรับการติดตามในรายการนี้ขอบคุณมากครับ